everyone, Jana is here, and today I have a special guest, Paul, from Fiduciary Wealth Management. Hi Paul.
Hi Anna.
How are you?
Very well, and you?
Me too, thank you very much, and thank you for making this video with me today.
Yes.
And I haven't made videos for quite a while actually, and we will be talking about gold today. I do usually technical analysis really on my channel, but I usually trade short term, okay, and scalping mostly gold, and I don't usually look too far in the future and trying to predict the price, but I mean I would do it today, and Paul is going to give us the picture of gold, what you think about more in the future, right? And a little bit about your background, so the viewers would know a little bit more about you. What you
I've been formerly a banker. I'm a qualified banker by profession. I've been in financial services since 1989. In my banking days, I used to run a trading desk, so Forex, spot and forward, matching foreign currencies, both on the loan side, the deposit, and just managing investment portfolios. So I've done it for quite a while. Markets, I don't think they've been as unpredictable as they are now, because they're completely upside down. And yeah, we don't look at the crystal ball and try to determine what's going to happen here now, because I don't think you can. There's so many variables influencing market dynamics and different asset classes and how they're moving. They're trying to, and I know you can do it through technical analysis, but we always like to think about the macro picture and look at the longer term and make fundamental decisions, conviction views, think about the long term. Whatever happens, if it falls, we try to not ignore, but stay as calm as we possibly can, because it's all about the longer term.
Right. So yes, we're very different. So you basically don't really use technical at all.
No.
So you only looking at fundamentals.
Yeah.
Right. And where in my trading, I'm like retail trader, and I mostly look at technical, and of course I'm listening the news and I'm watching what is happening, but mostly short term really.
Yes.
Right. So what should we do now? Shall we talk about
Fed Open Market Committee? Do you want to talk about the president a bit?
what? Well, okay, we can talk about, actually we're making this video on Wednesday, and we will have Federal Reserve in the US meeting today.
Yeah.
So, but this video will be a little bit later.
Correct.
And we will just try to talk about, well, we do know that from the previous meeting that Fed was saying they want to increase interest rates in America, right, twice this year, which from previous would be in July, which would be today possibly, and also another one expected in September, right? So basically for me, and then they will see what's happening next. So basically for me, how my understanding would be with gold, that it should push it. So it should make dollar stronger this way, because if they're going to make higher interest rate, then they will push dollar higher, and it means gold will go a bit lower. And so that's how I see it, the way from what he was saying, like last time.
Yes.
So I don't know what he's going to say today. So basically, in my opinion, if he's going to say that we are not going to do anything in September, then gold is probably going to go higher.
That's a fair assessment, yeah.
Right, but I think my view is that if they're going to say we are not going to maybe increase the rates in September, but maybe just pause and see, then I think gold might just consolidate a little bit before the next.
I would agree with you,
Okay.
even though we're looking from different angles. The way I see it is, the market is expecting a small rate cut, as you rightly say, now, and another one in the late summer, yeah? And then they will pause and wait and see. That's what the market expects. And then in 2024, the economy maybe goes into a recession or slows down slows down.
You think it will slow down in 2024?
I think there's a very strong possibility because you do rate hikes now,
right?
but it takes time to filter through the economy.
Oh.
It doesn't happen immediately. It's not like switching a light bulb. And you do the rate hike and then the economy. Companies, what they do, they reassess their capital expenditure because they will have to finance those capital projects.
Right.
And I say, well, if I have to finance them at 8 or 9% rather than 18 months ago, too expensive.
Right.
I'm going to wait to see where the economy goes into recession. If they go into recession, there's less demand for products and services. So they go, I'm not going to make an investment now. And then companies go, you know what? If we're going into recession 2024, let's reduce our workforce.
Right.
And they make more people unemployed. And that is the impact of rising interest rates.
Mm.
So yes, I agree with you, that's what's going to happen with interest rates. Now, why am I not convinced that they can increase interest rates much more? I think they might be able to do a few rate hikes. But the problem is, Jana, is that the US it's a long while since they've had this level of debt. Debt is today at 123% of GDP.
Right.
Just to give you, just in practical terms, it means, today, the interest payments the US government makes to service the national debt is greater than the defense spending.
Right.
And it's almost catching up with medical care in the US, you can imagine. So when interest rates were zero, they could borrow as much as they wanted, and there was no debt interest payments.
Right.
Now what happens is, because more of their budget revenue goes to pay the debt, it means that they've got less in budget revenue to pay for the services that the US government provides to its citizens. So it is not a sustainable model. It is not sustainable, and this is not an opinion, this is based on pure mathematics.
Right.
And that's why a few weeks ago they raised the debt ceiling. But normally what they do is they raise the debt ceiling. Right now the debt ceiling in the US, to give the viewer some perspective, is $31.5 trillion. What they've said is, we're going to raise the debt ceiling, but unlike in the past, we're not going to put a specific ceiling. We're just going to leave it open-ended until 2025 or something like that. So they're keeping it open because they know they're running budget deficits of 1.4 trillion a year. And the US has a specific problem. How do the US government finance the debt? They issue US treasuries. And the US treasuries, have, different maturities. Short-term, medium-term, longer-dated securities. A lot of those US treasuries they issued 2 years ago, when interest rates were zero, the coupon that they pay for that debt is very, very low. When those US treasuries mature and they have to reissue new ones, they have to do it at higher interest rates. So the debt interest payments will only get worse. This is like a Ponzi scheme. A pyramid scheme that is, there's something not right. It cannot be sustained. So yes, they can do a few more interest rates. Whether it's just rhetoric to show the market we're prepared to fight inflation, or whether it's just playing, or whether they intend to follow it through. Certainly, they might be able to get away with too little interest rates during the summer. Are they going to do more? I don't see how. Frankly, I don't see how. And it's true, the US economy has proven to be more resilient than everyone expected. Everyone expected to slow down much faster,
yes. But numbers were better.
But numbers are better, but slowly.
Yes, very slowly.
There's some underlying trends there that show, okay, the economy is starting to slow.
Yes. So you think that September they might or might not yet?
I think no.
2024?
I think in 2024 they might backtrack. But look, you said something interesting about, and I agree with you. US increases rates today, and tomorrow what happens to the dollar? Because we talk dollar, and one of the biggest factors with the dollar is, with gold, is US interest rates
Yes.
and the strength of the dollar. And US interest rates and the dollar are intertwined. Higher interest rates, higher dollar, which you explained, and I agree with you entirely. But what's happening now is that the US might be increasing rates, but the UK and the European Union is also increasing the base rates very aggressively. So yes, they might raise rates today, and that strengthens the dollar. But maybe in a week or two, the Bank of England and the European Central Bank come in and say, we're raising rates as well. So suddenly, the interest rates are more or less the same. Then the dollar shouldn't increase, because other countries have also increased their interest rates. And it's what we call hot money flows. Money flows to countries that pay, people look for higher rates.
Yes.
And they might go to the dollar, but if the UK and Europe increase the rates as well, there's no differential.
Yes.
So money doesn't flow, the dollar doesn't get stronger. I think there's already a clear trend that the US dollar is now weakening in value.
Right.
And that is very good for gold. But there's a lot of reasons why the macro picture for gold longer term is really positive.
Okay. So, well, I have to say that, you see, I don't know all of these insights in financial world, because I'm more concentrating on technical again. So well, okay, let's say everybody's talking that gold will be 3,000. What would you say? You see it happening?
I see gold
to
at
3,000.
3,000. The question is when.
Right.
But look, I think there's some underlying trends which are hugely supportive for gold.
Right.
I think one of them is that central banks everywhere have been increasing their gold reserves. In 2022, I think it's been the strongest year since 1961 or something like that, 50 years or whatever, 60 years. They were all building their reserves, their gold reserves.
Right.
And they're diversifying into gold. I don't think central banks would move their international reserves into gold if they thought the gold price was going to go down. No?
Okay.
Which country does that? No country does that. They think, okay, we better to make the monetary system more robust, to give it more credibility, because money has been in existence for a long time, but gold has been in existence for 5,000 years.
Yes.
So it underpins the whole monetary system. So what you see is the central banks buying gold and increasing their reserves. That is the strongest possible indicator that the gold price should go higher. So that's one. Two, when central banks are buying a lot of gold and gold companies are not investing their capital expenditure into gold mining and production, then you've got a supply-demand imbalance. So in other words, there's a lot of demand for gold, but the gold companies are not investing in new mines and new production.
Right.
Because they go, until the gold price goes higher, I'm not going to put capital investment into gold. So there's no new capital investment.
Right.
So production is coming down, demand is going up, supply demand. Everything is about supply and demand in economics.
Right.
So that's two reasons.
Okay.
The third one is the fact that government debt is at such high levels. Whenever there's high debt, the system becomes unmanageable and there's high risks. So people then look for gold as a safe haven and as a store of value. So I think with the high levels of debt, and there's no sign of countries starting to repay debt. In fact, the debt keeps growing because they are running budget deficits.
Right.
So the debt is getting larger, not smaller. Then, again, gold has always thrived. History doesn't always rhyme, but it repeats itself.
Yeah.
And, gold has always performed well when there was economic uncertainty and, when countries are riddled with debt, then gold tends to perform. I would say also the gold to the S&P 500 ratio is at all-time lows. Again, you look at those graphs, you will see that gold, to the S&P is trading at a very low level and certainly below its historical average. So looking at even technicals, they point to that. Of course, it's historical. Then you look at, we talk about inflation, and it's true. Inflation Everyone is saying inflation in the US is coming down. I agree. But 1971 was a good example during the oil crisis. There were 3 waves of inflation. And we may have only seen the first wave.
Right.
And there's one particular trend which feeds into the inflation narrative. And that is the rising deglobalization trends. So if you look 30 years ago, developed nations, especially the US, moved their manufacturing base to China. Why? Because they can produce the same goods. You know, this cup, if it costs $10 in the United States, if they manufactured it in Taiwan, China, and Asia, particularly China, they could do it for $1. So they moved the manufacturing base because reducing the price of those goods brought inflation down. So it was deflationary. But now, you know, with all the economic uncertainty, you know, China and Taiwan, Russia and Ukraine, there's a lot of geopolitical tension everywhere. Look at what countries are doing. They're saying, we want our essential industries internal.
Right.
We don't want to depend on third countries. I need to make sure that I'm resourceful enough to take care of my own people. Governments think like that, you know, leaders think like that. So they're now transferring the manufacturing base back to the home country. So they're producing the cup, again, back at $10. Inflation.
Right.
So I think inflation, the genie came out of the bottle, and I don't think it's that easy to put it back in. The trend now in the US is down. Whether they can sustain it or not is a different matter. So I would say that. Also, I think is really, really important is most discretionary investment houses, they run 60-40 models. So they run 60% in equities, 40% in bonds. But when interest rates are going up, bond prices are going down. For example, the UK gilts in 2022 declined 25%. UK gilts are like US treasuries. People buy it because they get a coupon and it's super safe. Now, went down 25% because interest rates are rising. So a lot of these discretionary funds, they invest 40% in bonds at the wrong time. And that's why last year they delivered negative returns. When in fact, what we'll see, and I think we will see, is that people will start investing again and taking a bit higher positions in gold to counteract the fact that bonds are moving in an environment where equities are not going anywhere, bonds are moving down. So the logical thing is to have some exposure to gold. And then I think we have so many different macro imbalances. We've got the debt problem of the 40s, you know, when we had the Second World War and there was reconstruction and development and inflation, when ran riot, debt problems of the 40s. We have the inflation issues of the early 1970s, the gold crisis, you know. And then we have, you know, asset valuation imbalances that we've seen in history again. Stock markets being overly valued relative to the size of the economy. We have all those things in one point in history now. So why wouldn't gold perform in this type of environment? The problem is that there's, you know, you've got the big banks, JP Morgan, running really large, they do a lot of short selling on a big scale to keep the gold price, manipulate the gold price, and the price of silver down. But you know, at some point, it will turn around. And then will it get to 3,000? Will it get to, you know, and I hear some ridiculous, 10,000 gold, 5,000. Again, I haven't got a crystal ball. But should gold be at a different level than it is today? For sure. It's just below its high of 27.5 or 27.0.
Yes, something like that. Yeah.
It broke it a few months ago in intraday trading, but not at the close. At close it was just below its all-time high, but intraday it did break through. Will it break through? I think once it breaks through, I'm talking technically, I think we've seen how do you say,
three tops, no?
Three tops.
Yeah,
We've seen three tops. It is three tops, yeah?
There could be some other names. Yeah, that's what I was going to ask.
So what I hear from technical is that, and if I may add, and if gold is near the high, look at silver. The high was 48 to 50 an ounce,
Right.
and it's trading at 24.50. You know, so, and that was I think in 1981.
Right.
So 42 years later, it's trading at half the price it was trading 40 years ago. Tell me about one asset class that trades half its value 40 years later. None. So they're really, really cheap right now.
Right.
But you know, for the investor that is patient, relaxed, calm, and looks at the bigger term.
Right.
Shorter term,
So
God
that's
knows.
what I wanted to kind of to see what you think
Yes.
about, because you see that technically when I'm looking at it right now for longer term, that that we will still go down. So I would just say, for example, if like I'm saying, I don't really go into the long terms, but for example now, would I wanted to buy gold and hold it and wait for it to go higher, or should I wait for it to go lower? Because that's what when I'm looking technically, and I see this like the triple tops, right? And also two big tops and one big bottom. And that's how I see that no matter what happens with the interest rates or wherever else, but technically that we need to have another bottom here.
Yeah.
That's, I see that picture.
I mean, short term that could be the case.
Right.
But remember, at the end of the day, what drives markets? Flows. You know, there's a saying where the focus goes, the energy flows. And in markets, you know, the trend is your friend.
Yes.
And if people are not investing in gold, even if the macroeconomic picture is extremely favorable,
Right.
then there's not enough capital flowing into gold to justify a higher price. You might think that that television set is worth $100,000, but if someone in the street only pays $3,000, that's the price. So unless money starts flowing into gold, we will see this technical picture, the three tops, but it doesn't break through, then it comes down. Could it come down? I don't know.
Right.
First and foremost, you know, the macroeconomic longer term picture is really favorable. But the bottom line of all this is investment money flowing into gold, and that is what's going to drive it. But once someone comes in, you know, the herd mentality in financial markets, you know, once everyone starts going in, everyone wants to follow. That's what you need for gold. But if that doesn't happen, it could be range trading for longer. Honestly, I have no clue.
Right.
I just know that the macro picture looks very favorable, but in the absence of investment flowing into gold and silver, it means nothing. And technically, yes, it will go down shorter term, for sure. But I think at these levels, it seems to be consolidating between 2000 and 1900.
At this moment, yes,
It's been more.
That's what is the main question. I think everybody's at right now. Like we have some people saying it's still going to break through from here, and some are still saying that it should go down lower. Yes, which that's what I'm more towards, that it will go lower first. So, but in overall, also technically looking, I see gold is going up. So we do have still the trend here is up, but at this moment technically it shows like it's quite high at this moment. So the gold is a little bit too high. So that's how I see technically. So I see that it might try to break a bit more, 2000 something, but just the technical view would be still would have to go back down a bit, create another bottom, and then we'll start to continue.
It makes sense, you know, as a looking from my perspective, it's not technical, it's not macro.
Yeah.
For me, it seems to be range trading between 19 and 2000, because the macro picture might be very positive, but money is not flowing into gold, and then technically it's not breaking through 2000, so the natural thing, it goes lower, and then people buy again, and it keeps with range trading. And I think the determining factor at the end of the day is neither technical nor macro. Is money going into gold, yes or no? And until that happens, I think we have pretty much more of the same. No? The short-term trade, they're saying, okay, this price I buy, and then this price I sell. And the macro picture is very nice, but no one is supporting that. I think that's how I view it.
Right.
And then I get, those values, it's 10,000 and it's 5,000 and it's based on this, it's based on, the extraction of gold and then its intrinsic value. I mean, who knows? Can I see gold at 2,500? Oh yeah, I can see 2,500. Could that happen quickly? I think if they start reducing rates at the end of the year, I think gold will explode. I have very little doubt, because the markets are always forward thinking and they're going, if they reduce rates, we might go back to zero, the economy might go into recession and stock markets will go like this, and we need something which is solid. What is more solid than gold? That has been in existence for 5,000 years. It's money. Gold is money.
Yeah.
So I think that could be the catalyst and the trigger for gold.
Right.
So money flowing in, or first event, US seeing a recession looming and starting to cut rates very aggressively. And the money, people pull out money from US treasuries and investments because they don't pay so much in cash, and they look for alternatives. They might go into gold. For line oil, or go into crypto.
Right, yes. I actually think quite a lot about that crypto is going to kill gold.
I hear that all the time.
You too. Yeah.
I think there's probably space for both. I think younger generations will go into crypto, and Bitcoin in particular. I think older generations will go for more traditional assets, which is gold. I think they do compete because some of the money would have flown naturally into gold before the existence of Bitcoin, and maybe it goes now into digital assets like crypto, but I don't think that is the reason why gold hasn't expired. I really don't. I think yes, some of the money has not flown into gold, and maybe gold would have been higher, but it doesn't explain the whole picture.
Right. Okay. Well, I guess we will see.
We will see.
Yes, because I see. Well, also would have been like more towards that both should exist. Kind of. We'll find yes, the interest. Gold will find its own investors, and Bitcoin its own, but that the Bitcoin completely kills gold, I don't think so, but who knows? You never know these days, anything can happen.
It might damage it a bit, but will they kill it completely? I don't think so. I think they both can coexist in the same universe of assets. Yes.
Well, that was really interesting. Thank you very much. So I kind of learned quite a lot. But to be honest, I find it quite hard still to look into the future and try to predict and go for longer terms. I still prefer to look into the shorter terms, to be honest, and trade gold. Usually I do day trading, and scalping, so
gazing,
it's much easier.
Gazing into a crystal ball. We cannot foresee the future. We can only base it on some demonstrable facts. And then try and support the case for gold or argue why gold is going lower. But the answer is, we need money flowing. That is the reality. It's supply and demand. Yes. Economics is all about supply and demand. Right. If there's 10 people want to buy this and there's only 5, the price goes up. Yes. And if it's the other way, it goes down. And that's the simplifying, valuations, Yes.
Right, okay. Well, thank you very much for
your
time,
thank you for having me again.
Some like that picture of gold. And of course, guys, if you are interested to know how I trade, you can find also links in the description of this video. I also have a free Telegram channel, which is Jana FX, where I'm sending my trades. And also you can find more about Paul. Also find link in the description of this video. Paul company's fiduciary wealth management in Gibraltar, based in Gibraltar, and helping people to relocate to Gibraltar, right?
And Spain and Portugal.
Oh, in Spain and Portugal too,
yes,
which we're actually talking about different types of residency in my other channel, which is Jana Travels. And well, that's it for now, guys. So if you have any questions, of course you can write here, comment, And also, if you're interested in anything, you can contact Paul and his team. Also, find link in the description of this video. And thank you for watching. And thank you once again.
Thank you.
Thank you.
Thank you.
Bye everyone.
Bye.
Bye.